was born under a wandering star. I was born... Well, hello. Were you born under a wandering star? Or do you have an absolute direction? Let's talk about consistency. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy trader. And it must be true, because it says so on my t-shirt. And look at all the toys that are behind me on my desk. I have loads, and I need them. Stop me getting bored while I'm working. So, what am I banging on about today? Well, it's Saturday afternoon. Got my coffee, so it must be coffee time with Scruff. And this is where I kind of ponder my thoughts, maybe respond to some emails that I've had during the week or some comments, and try and put it into plain English without baffling too much. It's a general idea. And I'm going to give a special salute to Chris. Little salute to you, my friend, Sir Chris. So Chris is it's kind of a running joke from Game of Thrones, rather. Put my teeth back in. It's Saturday. It's been a hard week, boys. And I kind of want to discuss consistency. And consistency is what you need as a trader. Without it, you're finished. You know, because you're descending into gambling, looking for that big hit all the time. That's not where it makes you money. Grinding away day in, day out, consistently gaining is the way forward. Now, I know a lot of people look at me and they go, well, you're mega consistent. Nobody can be that good. I'm not that good. I'm really not. But I am consistent. But what makes me consistent when there's somebody else sitting next to me and not? Well, I'm very methodical in what I do. I have a set of plans that I know I have to carry out. I know what tasks I need to perform. And importantly, I know when to quit. Okay, it's that simple. Because this is my job. It's what I do for a living. And it's kind of why I don't sell courses or anything like that. I have very little interest in doing that. And when I'm putting the trades on the screen that you see, it's in real time, and many times I'll tell the Scruffy squad, well, they already know first thing in the morning what I'm going to trade, because I put a sheet up, and that sheet tells me the strengths of the market, but it also tells me the market I'm going to trade and what direction I'm going in. So they know well in advance what I'm trading, and I'll often show them and I'll tell them why I'm going to trade it as well, because I have an array of tools in my tool bag. You've got to apply the right tool to the right job, because there's different markets. Are you in a trending market? Are you in a range-bound market? Is it reversing on itself? Is it a pullback? Is it a rotation round a moving average? Many, many different things, but you need to be able to recognize it. And if you can recognize it, then you apply the right tool. Very, very simple. Just the same as you guys out there in the real world doing your job. If I take my car to a mechanic, there's many different components to the engine within that car. So is one tool going to fix all of the components? Of course they're not. The guy looks at the engine, he'll diagnose what the fault is, and he'll apply the right tool for the job. Now, when I take my car to this mechanic, and I let him loose on it, do I want him to repair it 9 times out of 10 because he knows what he's doing, or do I want him to repair it 4 times out of 10 because he does a bit of trial and error, bit of, well, I think it might be this? Where would your car go? Mine goes to the guy who knows what he's doing and consistently performs. It's that simple. And trading is the same. You know, it's why you see me do it day in, day out. But it's because I have a plan. And that's what this is all about. So I'm going to jump on the whiteboard and I'm going to go through a few pointers to make you think about trading, maybe in a different way. Because when I see the guff on sort of YouTube,
you ding dong!
Oh, make it stop!
I don't see them trade. And I certainly don't see any consistency. And when they pull up a screenshot of their phone saying I've done all of this, doesn't mean blind thing. You know, it's not like the statements that I pull up. You know, I'll pull up a live statement and I'll show you it there and then. You can see the website moving around. It ain't anything but what's in front of you. You know, did the 5%ers. In fact, I'll use the 5%ers as an example on the whiteboard in how to become consistent, because it is a good barometer of your skill level. You know, and if you're interested in the 5%ers, check the link below. You'll get a discount off the buy into it because they've got a boot camp at the moment. That is superb. It really is. Low buy-in to a massive fund. And that fund goes up to 4 million. I've never seen anything like it. So, but that's for you guys to check out. But I'll use the figures to show you how consistency can be achieved. So, come on, let's have a look at the whiteboard.
Well, we're waiting.
Okay, so I'm going to touch on consistency, and kind of the way that I look at it. Now, there's a few things thrown at me all the time, and I've wrote them on the board, and we'll kind of go through them as to the pecking order as to why and how consistency comes from these elements. Now, what I've wrote down is account size, the system that you use, the bid size, market risk, etc. Okay. So if I said to you straight away, what breeds consistency? The number one is always, what's the system? Strategy. Just show me a strategy. I'll be all right if I have a strategy. No, you won't. You can get in on the market on the flick of a coin and be as consistent as somebody who analyzes like there's no tomorrow with the system. Why? Markets are dynamic. You need to know how to get in, you need to know how to get out. And getting out is more important than getting in. Now, this is something I'm going to touch on in a live stream tomorrow, because risk is certainly more important than strategy. So that kind of throws out straight away the system. But you do need a system of sorts. You need a set of rules and you need a plan. The next one that's thrown at me is account size. Well, if you've got a huge account, you're always going to make money. Yeah, lose a lot of money as well. So your account size just allows you to open up positions. It allows you to trade any market. So it gives you a wide range, if you like. It doesn't breed consistency. So straight away, the first two, which are thrown at me all the time, are kind of dispelled. And they say, well, it's the bid size. Yeah, have a tiny wee bid. And then you can have a massive stop. Yes, I agree with that to a certain level, and I subscribe to that. So that is far better than the system. But in order to open up a bid size, you need an account size. And what's that got to do with the price of bread? You see, what's a small bid to one person could be a large bid to somebody else. So for argument's sake, if you're a high net worth individual, a small bid size to you could be £10 a point because you're worth a bob or two. But the guy standing next to you might think that's a colossal amount of money. So again, why would that breed consistency? It wouldn't. It's just based on what you have in the bank account. Then they say, oh, well, it's the markets you use. It's got to be the markets. You know, I trade the DAX. So I'm consistent because I know it. Yeah. DAX is quite a volatile market. And markets change conditions from day to day. So what's working for you at this moment in time, because you're really good at a trend following situation, and let's be honest, all the indices have been on an upward trend recently, shooting fish in a barrel. What if it goes into range bound? What if it goes into rotation? Could you trade it then? No. It just means that you're consistent at this moment in time because the conditions of the particular market you trade are aligning with your system. It's that simple. But if those conditions change, that system is thrown out of the window. So again, that's thrown out as well. Then they say, oh, well, it's risk. It's got to be risk. Well, risk is part of it. Because in order to be consistent in making money, not winning trades, making money, because you start the day with 0 and you end with 1, you do have to control something. And that's your risk. But then it comes back to the market, because different conditions mean different risk profiles. If you're in a trending market, your risk can be pretty tight because you're getting in on the bottoms and hopefully catching up. If it's oscillating, they need to be a bit wider because you need to be able to stretch out the range. So your risk becomes a bit of an issue. But there's one thing can tie all of that together and be consistent. Because as I've just gone through that list, they're not consistent because minor changes can affect the outcome. The one part that is constantly consistent and helps you plan and helps you put your tools together is the goal.
No way!
The outcome of what you're trying to achieve. That's always fixed in stone, or at least it should be. Because if you're going into the market going, well, just see what I can get, you've already lost. How many times have you done this? In fact, this is a little salute to you, Dusty, because you admitted to it this week. You have watched your P&L rise quite well, only for it to turn round, come back, and either give 90% of that trade away or even take it into a loss.
Out of the frying pan.
And into the fire.
That's because your goal wasn't set correct, or you didn't recognize the conditions, the market. You do it all the time, you know. But if you had a goal in place, it'd run up 20 pips or whatever your target was for that particular trade, and you pulled the plug, you'd have made money. But because you were greedy, you tried to hang on, the market did what the market always does. It shows it's bigger and better than what you are and takes it back.
Isn't that logical?
And that's the game. All right. So goal is important. Now I touched on the 5%ers, and they've got a boot camp at the moment where you've got to do 3 challenges over 12 months. And the first challenge is 2,000, you know, £2,000, dollars, whatever. I often talk in pounds, guys, because I live in the UK, so do excuse me when I do that. So the first goal that you know is 2,000. So let's get rid of some of this guff. I know there's camera flare on it, so I'll keep it over this side. Right. 2,000. That is the first goal. Right? We know that because it's set in stone for us. Now, I've just said it's 3 challenges over 12 months. Well, break your 12 months into the 3 challenges, which gives you 4 months to do this. So you've got 4 months to achieve that. Right. So what do I have to do in 4 months? Well, I break it down further. What do I have to do in 1 month? Well, in 1 month, I need 500. So straight away, you've got something to work to. If you're a swing trader, you can work out what 500 is over a period of time and look for the trades to achieve you 500 a month. But who knows how far that can go? None of us have a time machine. You know, we don't. So it's speculation. So you need to break it down further. Now, I'm a day trader, so I break everything down into a day. All right. So the next part of it is, well, all right, it's 4 months. For each month, I have to do 500. What's that in weeks? Well, it's 17.3 weeks in 4 months. So we'll just say 17, we'll round it. So 17 weeks. Well, what is that? Well, for 1 week, it's 117. It's getting a bit more palatable now. You know, 117. It's not bad. I'll do that in a week, I think. Because that's only 117 pips across 5 days. Okay. Well, in 4 months, that's 85 days, which equates to 1 day, 24 quid, £24 in a day. So that's our baseline. All right. So just scrub that down. So you've gone from 2,000 to 24. All right. Now this might seem a bit convoluted and go, what? I don't quite follow. What you're looking for is consistency. So now you've got something that's palatable. It's 24 quid a day. Now you can now look at your system and think to yourself, well, I can easily do 20 pips a day on that. Right. So if you can easily do 20 pips a day, it's not quite ready to hit your 24. This is assuming you're on £1 a point. So you've got to do it twice. Right? So you either do 2 trades or you up your position size, your bid size. So your system's telling you how far you can go. Your bid size is now telling you where it needs to be. Okay, so system times 20. You know needs to be 2 at that point. I only want to trade once a day. So what do I need to do? Well, I need to adjust the bid size so that it makes 24. Okay. So what determines the bid size? Well, that's your balance. Okay. What market can give me the trade in the first place? Well, the DAX, the FTSE, cable, euro, dollar. They'll all do 20 pips in a day. So now it's market. And it all comes back to the original saying, goal. You want to be consistent, guys? Look at your goal first. What do I want to achieve today? Not in a month, not in a week, today. And in this equation, it's 24. Then you start reverse engineering how you're going to do it. And that's what breeds consistency, guys. Break it down to the smallest component and then build backwards. It's literally that simple. But if you're rocking up thinking, I need to do 2 grand because I'm on a challenge of 2 grand, you've missed the point. You haven't got a challenge of 2 grand. You've got a challenge of £24 per day. That if you achieve it and you're consistent with it, will give you your 2 grand. It's just a different way of thinking of things. Okay. And once you've done your 25 quid a day, because always round it up a little bit, because all these little pounds will add up. And the day that you have a bit of a wobble, those pounds will pay off that wobble. You'll be amazed how easy trading becomes. Well, easy on the mind, because it is a difficult thing to do. I set the guys in the Discord group a challenge. 1 trade per day for 30 days. Be interested in the comments, because I already know what the results are. There's not many of them could achieve it. Why? Because it played with the mind. And because it played with the mind, they were jumping from here to here, or they were over trading. And these are all parts that destroy your consistency. And consistency is the only thing that will ever make you profitable. Not a strategy, not an account size, not a bid size, nothing. It's your goal. Put your goal into place, work it out, and when you've achieved it, you stop. And if you do that in a realistic sort of framework, if you like, then you'll become consistent. It's kind of my take on things, and it's the way that I've built accounts, and it's the way that I show you that I've built accounts, day in, day out. So there you go. If you're stuck, by all means contact me. You'll find all my contact details in the description below. If you do want to try the 5%ers, there is a link there that'll give you 5% off. Or if you just want to use your own funds, check out Black Bull. They've got good leverage at this moment in time, 500 to 1. And if you want to support the channel, check out my wife's shop and buy some Scruffy merchandise. But as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.